welcome to Morning Markets. I'm Matt Scooby. Let's have a look at some of the stories that we're tracking for you in the BNN Bloomberg newsroom. U.S. President Donald Trump threatening to launch major strikes on Iran tonight and says the U.S. will take full control of its oil and gas industries, including the Carg Island oil terminal in the near future. The comments come as attacks continue between the warring countries, and the U.S. military continues to enforce its blockade of Iranian ports. Carg Island is key to Iran's oil industry and sees 90% of its exports pass through it. Shares of Transat AT are under pressure today after its second quarter results failed to meet estimates. Revenue came in well below expectations, while adjusted profit also saw a decline. The airline operator says rising fuel prices caused by the Iranian war and flight suspensions to Cuba were key factors. It intends to apply for the new federal funding program to offset the impact of fuel costs. Transat has also implemented surcharges on new bookings to try to mitigate the impact. Oracle shares continue to slide today despite beating revenue and profit estimates. The software company's revenue was up by 21% in its fourth quarter, and it also raised its profit forecast for the year. However, investors seem to be showing some concern about Oracle's plans to raise more money to finance its build-out of data centers for AI. Oracle says it foresees raising an additional $40 billion through debt and equity financing. Let's have a look at the markets so far early in the trading day, but some green on the board. That is the good news today after we saw, again, another round of sell-offs yesterday, in particular, technology sector, AI and otherwise. But the TSX up over 200 points so far on this Thursday, which again is good news for now. We'll see if any impact, especially with the latest coming out of the White House and Donald Trump's plans in the Middle East too. South of the border, again, green to start the day. A little bit of buyback, or at least on the Dow. It just switched over. The Nasdaq is now down slightly. S&P, again, those were green just a short time ago. So looks like, again, we'll see, and we'll hedge at least a little bit to see what happens over the next couple of hours. Well, Canadian discount retailer Dollarama is surging after beating first quarter estimates with higher profit and sales. For more on that and other market action, joining me is Benjamin Klein, Senior Portfolio Manager at Baskin Wealth Management. Benjamin, thanks for being here.
Thanks for having me.
So Dollarama, how about this today too, saying it's expanding its store network in Canada, but and these results as well, I think typical, or not typical necessarily, but certainly an indication the affordability crisis that we are seeing in this country and many consumers flocking to the discount retailer.
Yeah, exactly. I think these results, they show a continuation of the K-shaped consumer spending curve, in which the rich continue to get richer, and the not so fortunate continue to have to spend more money at places like Dollarama and other discount retailers. Obviously their results were good. Whether this is a good thing for the economy and for the country is maybe a different question. But certainly they're very well positioned to benefit from Canadians' increasing reliance on discount retailers.
So the stock, seeing a big jump today, clearly, we talked about the weaker Canadian economy. We heard that from the Bank of Canada yesterday, and the discount hunting, consumers that are clearly out there right now. Is this going, do you think, boost that stock even further and that it needs here as you look at the chart from the last year?
Well, I think one thing that investors like about Dollarama is the defensive qualities. As the economy gets worse, at least in theory, people will be encouraged or maybe even forced to spend more money at dollar stores and discount retailers. And given the continued sluggishness, shall we say, of the Canadian economy, I think that that lends credence to Dollarama being well positioned.
What about travel company two? Transat clearly reporting a quarterly loss. We're finally starting to see some of the impacts too of the higher oil prices, in particular when it comes out. Those fuel prices, more than doubling at one point. They were double what they were at the same time last year. We had the suspension of flights to Cuba. So investors seem to have shrugged off, the results at least for now too. But give us a sense of where it stands too for Transat today.
Yeah, I mean, it's obviously an incredibly difficult environment for travel companies and airlines, with obviously the uncertainty and the volatility in oil, and I mean, volatility in the bad sense for them, given that oil prices and fuel prices are so much higher than they were even, 4 or 5 months ago. The government, of course, is looking to help. We don't know what level of what's the word of help they're going to provide. It's an incredibly difficult environment and basically they're going to be forced to jack up, ticket prices and add surcharges because there's no way they can turn a profit or anything close to it with fuel prices being so much higher than they were.
And do you think we're going to see this trend to continue as the other airlines do as well, at least for right now in the near future? Because without an end to the conflict in the Middle East, certainly feels like, even as we get into the busy summer travel season, travel habits are changing. So do you feel like this is going to continue to be the trend that we see coming from airlines and travel industry?
I think very likely. Of course, the elephant in the room is what's going to happen in Iran, and I don't think anybody knows that. But if there continues to be huge amounts of pressure on fuel prices and oil and gas prices, then I don't see any reason why it wouldn't continue. We're seeing this from other airlines too. Of course, Air Canada suspended its guidance, and other airlines are doing the same thing. I don't think they really have a choice, quite frankly.
Let's go to tomorrow's big event, the SpaceX IPO. It is certainly going to be fascinating to see how this plays out, I think. A lot of attention on it for now. Are investors paying enough attention to the business that they are actually buying into, in your view?
Good question. Diplomatically, I'll say I'm not sure. There's obviously there are parts of the business that are really attractive. I mean, Starlink is a great business, healthy margins, growing market share. It's taking market share away from incumbent telecoms. Obviously, given the size and the scale, it would not come anywhere close to justifying the valuation on the IPO. So clearly, there's a pretty speculative element here. I mean, to this point, you have not really been able to do much wrong by going against Elon Musk. But at some point, the business fundamentals do matter. We're not taking part, but we obviously there's a world in which this turns into an enormously powerful network, and that investors' hopes and dreams are realized. But who knows?
Yeah, again, it's going to be interesting to see. Now, again, there are other mega IPOs to follow too, right? We're anticipating Anthropic and OpenAI to come here in the next number of months. Plus, we have that $80 billion share sale from Alphabet too. Do you expect fresh inflows for these, or more of a rotation out of some stocks and other positions, to go into those sales?
Yeah, it's hard to imagine that there's so much dry powder left, given how strong the market has been over the last 4 years. It seems to me very likely that you're looking at rotations out of other sectors and out of other investments. Obviously the first IPOs to come along and the share issues are going to some degree dictate how much enthusiasm there is. But obviously, from where we're sitting today, there seems to be a completely unbridled enthusiasm, and who knows? I mean, IPOs are difficult at the best of times, but particularly mega IPOs, and particularly in such a frothy market as we've seen so far. So it will be very interesting to see.
Yeah, it's certainly going to be interesting to see here over the coming days and weeks. Benjamin Klein, Senior Portfolio Manager at Basking Wealth Management. Appreciate your time today, Benjamin. Thank you.
Thank you.
Well, coming up, we're going to take you live to the U.S.-Canada Summit with an interview featuring former President of Iceland and the chair of the Arctic Circle. Stay tuned for that. We're back in a moment. We're going to take you now to the U.S.-Canada Summit, where our Lindsay Biscaya is standing by with Oliver Grimson, chair of the Arctic Circle and former president of Iceland. Lindsay.
Hi, Matt. Thanks so much. Yeah, we're joined, as you said, with Oliver Grimson. Mr. Grimson, it's great to have you join us. Thanks so much.
Thank you.
So we know Arctic security has been kind of at the forefront of a lot of conversations over the last couple of years. As founder of the Arctic Circle, maybe you can just start off by telling our viewers exactly what that entails.
The Arctic Circle is the largest annual international gathering on the Arctic, with the assembly in Iceland every October, with over 2,000 participants from more than 70 countries. And in addition, we do forums in Europe, in Asia, and the Middle East. We've done it in Canada as well as the United States. So it is a manifestation that the Arctic, which 20, 30 years ago was a remote part of the northern part of the globe, has now become a global playing field for all the major countries in Europe, Asia, as well as the Arctic countries.
And really, when it comes to Arctic security, that strategy has really become a priority for NATO and its kind of founding members over the last couple of years, right? Like, what's driven that change? What have you noticed that's happening recently that's really brought Arctic security to the forefront of discussions?
Well, the term Arctic security, which most people use, is a very vague, difficult term, because the Arctic is a huge part of our planet. Most people talk about it as if it is a region, but it is of continental proportion. It's almost half the size of Africa when you add it all up. You have the Russian Arctic, which is about half of the Arctic. Then you have what you could call the center Nordic Arctic, Iceland, Greenland, Norway, Sweden, Finland, and so on. And then you have what you could call the North American Arctic, which is United States and Canada. And when people are talking about Arctic security, they're certainly not talking about the Russian Arctic. To some extent, they're not talking necessarily about the American Arctic, because the American military takes care of that. So perhaps people are increasingly talking about the Center Arctic, which is Greenland, Iceland, Northern Norway, and so on. And although there is a lot of talk about it, we have not really seen any concrete proposals or changes, because people have to realize that if you are going to enhance security, military presence in the Arctic, it's very expensive. It's a very difficult and challenging territory. So you need an escalation in defense funding on the scale that we have not seen in recent times for any specific purposes. Mm-hmm. So although there's a lot of talk about it, the question is about the reality. And of course, the big elephant in the room is, of course, the claim by the Trump administration to have Greenland within the American territory in one way or another. So in addition to all the new developments of Arctic security, we have the largest land claim in the Arctic put forward in modern times. And although people prefer not to talk about it, I think it's a reality that Canada has to deal with, that we in the Center Arctic have to deal with. And it's one of the big uncertainties in the US-Canadian Arctic relationship in the coming years.
What do you think people prefer not to talk about?
The claim by President Trump
to
have Greenland in one way or another as a part of the American territory, American control. Hopefully there are now negotiations taking place, but nobody knows whether they will be successful or not. So when you talk about Arctic security, yes, you can talk about Russia, you can talk about China, you can talk about missiles and so on and so forth. But one of the big questions, of course, is what happens to the claim by the Trump administration to have control over Greenland in one way or another.
I'm glad you broke down the different sections of the Arctic, because yes, I think we are talking more about the central side of things today. But you mentioned who will fund Arctic development and who will be paying for a lot of the kind of security that's needed. Where do you think that funding should be coming from?
Well, this is one of the crucial questions, because if you look at the North American Arctic, the Canadian and the American Arctic, there's a need for huge infrastructure build-up, harbors, airports, hotels, facilities, and so on. And whereas you have seen fundamental economic progress in what I call the Asian part of the Russian Arctic, between cooperation between Russia and China, Russia and India, Russia and other Asian powers, and you've seen a great progress in infrastructure in the Center Arctic. I think to some extent the North American Arctic, the Canadian and the US Arctic, is somewhat lacking behind. And as I observe it, there is also a lack of awareness here in the North American part of the Arctic, that in the last 10 years or so, We have seen new arrivals, financial, science, political arrivals in the Arctic, where all the major powers of Europe, France, Germany, Italy, Poland, all the major powers of Asia, Korea, Japan, China, India, are now placing themselves in one way or another in the Arctic. You even have the UAE, the United Arab Emirates, wanting to create a presence in the Arctic. And one of the big questions, investment, business, financial questions for Canada and the US is not just what you do in your part of the Arctic, but how will your interaction be with the corporate entities, the investment banks, the government sovereign funds and others from Europe, Asia, Middle East, who want to come into the Arctic in one way or another. So this has become, to some extent, to use an historical analysis, a new economic frontier, like the American West was 200 years ago. And the speed of change in this new economic frontier is of a greater scale and faster than I think most leaders in the Canadian or the American business community are actually aware of.
Big discussion to have in just a couple of moments, but Mr. Grimson, I really appreciate your time. Thanks for joining us.
Thank you.
Matt, I'll send it back to you.
Okay, thanks, Lindsay. I appreciate that. We'll check in with you a little bit later. Well, coming up, today's market drivers with Bloomberg's Monique Malima. Stay tuned for that after the break. Now it's time to take a look at today's market movers. We're joined by Bloomberg equities reporter Monique Malima. Monique, let's start with Oracle, shall we? Posts a great quarter, posts a beat, in fact, too, but plunging today as well. Tell us what's happening with investors and specifically Oracle today.
Yes, so Oracle, their shares are trading lower this morning as investors are really focused on their capital spending. Like you mentioned, their quarterly revenue actually did beat, but they raised their quarterly spending estimates for the fiscal year. They were originally planning to spend about $50 billion, and now they've raised that to $70 billion. These higher costs are coming from prepayments for components and for some of their data center costs. And while analysts do see a need for the company to spend in these areas, especially with the growing demand for data centers, they do think that this also might be conservative. Some are saying that the company might have to raise their spending even further, that this could mean incurring more debt or having to do more equity offerings. So there is just a bit of caution around what the capital expenditure outlook looks like for the company.
Yeah, certainly going to be interesting to hear. Let's go to Intel as well, getting an upgrade today from the Bank of America. Tell us why.
Yes, so Intel, their shares are trading higher this morning after Bank of America gave them a double upgrade. They were originally rated an underperform, and they've now been upgraded to a buy. And this is largely because of the central processing unit sales outlook. They're expecting that by 2030, Intel can be generating about $40 billion in CPU sales. And they also see opportunities in their foundry segment with potential deals with Apple, ARM, and others. So they really see a lot of growth ahead for this company, which is why they've done such a big upgrade and also raised their price target on the stock. And it seems like investors are also reacting positively to that as well.
Nuclear startup Oklo is also posting gains on the day today. This is an interesting one. Take us through that.
Yes, so Oklo, they're trading higher after they got preliminary safety analysis approval from the U.S. Department of Energy. This is for Oklo's power facility in Idaho, which they're expecting to be the home of their first small modular reactor. So this process of approval means that they can move further along in their process of getting that power facility up to speed and to be able to start running. They're aiming to have that in operation by late 2027 or early 2028, and this helps them be able to advance that and keep on track with that timeline. So that's why we're seeing a lot of positive reaction to that today.
And did something about Meta too, and signing did they sign a deal with Meta Platforms as well? Do we know anything about that?
I'm not too sure about that. They had announced some deals earlier this week as well. So there's been a bit of momentum in their uranium space in general throughout the week.
Yeah, certainly fair. Okay, Bloomberg's Monique Malima, I appreciate this, and thanks for the update. Coming up, shares of Aurora Cannabis are under pressure today after the company said its revenue is expected to fall in 2027. We're going to speak to CEO Miguel Martin when we come back. The U.S. President Donald Trump threatening to launch major strikes on Iran tonight and says the U.S. will take full control of its oil and gas industries, including the Karg Island oil terminal in the near future. The comments come as attacks continue between warring countries, and the U.S. military continues to enforce its blockade of Iranian ports. Karg Island is key to Iran's oil industry and sees 90% of its exports pass through it. Canada-U.S. Trade Minister Dominic LeBlanc says he's not surprised that Donald Trump does not intend to renew the Canada-U.S.-Mexico trade agreement. Speaking at the U.S.-Canada summit, LeBlanc highlighting that the three countries can at any point agree to extend the pact after the July 1st deadline. LeBlanc says he expects bilateral deals to be reached adjacent to CUSMA, and if the deadline passes, Canada will continue to do what is necessary to preserve the trilateral framework. Meanwhile, U.S. Ambassador to Canada Pete Hoekstra says that America is open for business, but it's up to Canada to make a better pitch. He made the comments also at the U.S.-Canada summit in Toronto today. He said Canada could play a strong role as the U.S. rebuilds its manufacturing sector, but Canada needs to come to the table with a compelling case across all of its resources. Hoekstra says that a strong Canada benefits everyone.
We think a Canadian-U.S. business relationship is positive. We want a strong Canada, okay? We think a strong Canada across the board is good for the United States, it's good for North America, and it's probably good for the world.
Let's have a quick check on what the markets are doing so far. And again, in a rare sight in the last week or so, we see some green on the screen. The TSX up over 300 points to start the trading day today. A little bit of a swing back in some of the technology and AI stocks that we have seen plunge over the last several days, and especially too earlier this week. South of the border, also seeing some green right now too, which is the good news. The Dow up over 0.5%. S&P and NASDAQ also up too on the day so far. Well, shares of Aurora Cannabis are under pressure this morning after the company said its revenue is expected to fall in 2027. Now, this comes as the company shifts away from its Canadian consumer operations toward global medical cannabis. Let's get more from Miguel Martin, CEO of Aurora Cannabis, who's joining us here in studio. Miguel, welcome.
Thank you for having us.
So pivoting away from this, talking about this move to and away from commercial, especially, or at least for consumer cannabis here in Canada. Tell us about that move in particular and why now?
Well, Aurora has got almost a decade of global leadership around medical cannabis as Canada's, one of the first and also one of the largest in doing this business. That's the core part of our business. And importantly, it's the most profitable part of our business. So as we looked at the Canadian rec business, we really wanted to focus on that Canadian business where we have a leadership position, and also internationally. It's more profitable, the margins are better, and there's also higher growth.
So internationally too, where are you going? What's the plan here now moving forward for the next little bit?
So, we're one of Canada's largest exporters of medical cannabis. It's a great business. Canada's a leader in that position. Aurora operates in over 12 countries around the world, predominantly in Poland, Germany, UK, Australia, as well as being one of the largest providers of medical cannabis right here in Canada.
And understand that you've seen some significant jumps too, particularly in Europe, right? In Germany?
Absolutely. These are a highly regulated market with GMP requirements. Canada's got a long history in those regulations, Aurora particularly. And so we've seen great strength in that German market particularly, but also in other markets for us where we have excellence also like in Australia and New Zealand.
So what's driving the medical cannabis growth? You just touched on it maybe a little bit, but expand for us too, if you can, as you watch this globally, and in Canada in particular, but then globally as well for you guys.
Well, globally, it's about a $9 billion piece of business. So it's a huge piece of business. It's highly regulated, and it is a medical business. These are physicians prescribing medical products to a patient, and in many cases going through a reimbursed model, just like we see here in Canada. Some of these countries are adopting medical cannabis. I know there's a lot of interest in the U.S., but we've seen strong adoption in these markets. And you can ship medical cannabis if it's GMP, from here in Canada, which we do at a high level all around the world. So we're excited about that, and we think it's a great business.
Are you into the U.S. market yet? Are you trying to get into the U.S. market, or again, take us through the challenges of trying to do that?
Yeah, so for us, we're on the NASDAQ, and for those Canadian companies that are publicly traded on the NASDAQ or the New York Stock Exchange, because it wasn't federally legal, we were not allowed to enter the U.S. With descheduling now to Schedule 3 from the administration, we are looking at that opportunity of what that means. But for the last decade, there's been incredible opportunities for medical cannabis, both here in Canada, which has been a leader, but also in those key countries. So we're looking at the U.S., but we will be able to leverage the learnings from those key European markets.
I'm curious your thoughts, too. There was so much hype around consumer cannabis, right? That this was going to be, the billions and billions of dollars. We have not seen that play out in the way that has been expected, at least for right now. Why, in the seat that you sit in your knowledge right now, why has that happened, and why have we seen that in this country?
Well, there really were two paths. So there was this incredible excitement around 2019, 2020, that you were going to see this global movement towards recreational cannabis. Canada, obviously a leader in that. And what we saw is it was more the medical side that really saw the excessive amount of growth. That's really what we focus on. So we are seeing some of the markets, particularly at the state level in the U.S., starting to adopt slowly the recreational cannabis. But internationally, medical cannabis continues to grow. Key markets like France, Ukraine, Turkey, Spain, Italy are being added to those other countries. And again, it's a $9 billion piece of business. So it's going to happen. But really, that medical cannabis story is still a good one. And for Canadian companies, and particularly Aurora, there is a strong leadership position there that we really want to take advantage of.
Yeah, and it certainly sounds the opportunity is there. But was it an oversaturation in this country? I don't want to stick on it too much. But was it just too much happening too quickly, and it just kind of got, it was everywhere all the time?
I think on the recreational side, absolutely.
Yep.
There was an incredible amount of money that came in. A lot of companies featured it, but we do see more concentration on the medical side. There are about 30 companies to be about 50% of the rec business. There are about 4 companies to get you about 50% of the Canadian medical business.
Affordability, too, we know around the country right now, just generally. I know you want to focus on the medical cannabis part of this, though, too. But are affordability issues affecting the company right now, or give us a sense of that?
Well, I think, overall, cannabis costs have come down, particularly for patients, but also on the consumer side. We see it to be at a very approachable price point. Canada, because of its, incredible labor and a low energy cost, has some of the best production costs in the world, which is why Canadian medical products are the highest equity products in the world, no matter where you go.
So you're going to shift this for next year, too, and we talk about that. So talk about, you talk about the expansion, at least for right now, and a little bit down, but long term, as you continue this expansion, how many more countries are you hoping to be in, and where is the plan here for that growth for you otherwise?
Yeah, we think profitable growth is the way to go. So there were opportunities in our business to look at some of the businesses that were not as profitable, but there was still, these opportunities for growth. It was a record year in terms of revenue growth, and it was a record year in terms of adjusted EBITDA in those core markets where we can grow share. Now, additionally, places like Italy and Spain and France and Ukraine and Turkey, big, large economies, bringing on a regulated medical cannabis business, we are uniquely positioned to be able to take advantage of it and get the growth line back.
And do you have inroads there, too, into some of those and working on those clearly?
Absolutely. The experience working with, entities like Health Canada, the regulators in Germany and the UK, in Poland, set you up very well because there's very common regulations and certifications to get in there. And the Canadian facilities, particularly ours around here in Ontario, are really well served to take advantage of those opportunities.
Okay, certainly sounds interesting. Miguel, thanks for stopping by. Appreciate you taking some time.
Thank you so much. We appreciate it.
It's Miguel Martin, the CEO of Aurora Cannabis. Well, coming up, the U.S. president says that America will not be renewing CUSMA. We're going to get more and dig into that after the break. Stay with us. Well, Donald Trump has signaled that he is not looking to renew a trade deal with Canada and Mexico, adding that, as he said before, the U.S. doesn't need anything that Canada has. CTV's Abigail Beeman has the latest.
Well, I'm not looking to renew it.
Donald Trump muses he's not interested in renewing the North American Free Trade Pact as Canada pushes for a full 16-year extension.
I don't know that I'm going to renew it because, to be honest with you, the United States does much better. Hey, we don't need anything that Canada has.
This on the heels of Canada-U.S. Trade Minister Dominic LeBlanc's trip to Washington to meet counterpart Jameson Greer.
I'm eternally optimistic, Abigail.
And Ontario Premier Doug Ford's attempt at a DC charm offensive with business leaders and lawmakers.
They rolled out the red carpet for us. They treat us so well.
But one unresolved issue, the future of the Gordie Howe Bridge. Today, the Prime Minister seemed to walk back his claim that it's set to open.
No big drama. If it takes a little longer, it'll take a little longer.
While Ford said he hopes Trump changes his mind, and there's currently only a ribbon cutting on the Canadian side.
Basically a ribbon cutting. I'll be attending once we actually open the bridge and we're actually driving across.
The Premier hosting Pennsylvania's governor today, who had this to say about Trump's CUSMA talk.
I do not believe that the president is right in suggesting that we don't need each other. I think our economies are linked.
The July 1st deadline now just weeks away, but experts and officials alike trying to calm concerns, saying after that date, CUSMA won't fall apart, and Americans haven't signaled intent to tear it up. The big problem, ongoing uncertainty.
I've met a lot of Democrats and Republicans on my quick visit. Every one of them are saying, we got to get this done. We have to start moving. Because when you have uncertainty, investment gets stalled.
No official word from Dominic LeBlanc's office nor the Prime Minister's office. Mark Carney has said a number of times he won't comment every time Trump speaks.
And we got more on this from Michael McAdoo, partner and director of global trade and investment at Boston Consulting Group.
Economically, of course, the United States needs two of its four largest trading partners, being Canada and Mexico. And actually, the president didn't say anything new. There was, under the original CUSMA agreement, which he signed, a renewal clause, which said that unless all three parties agreed to renew the agreement on July 1st of this year, review process would begin, which means the three ministers would get together and decide how to improve the agreement. So that's been going on since well before July the 1st. And so there's really no news in what he said yesterday.
So really, this is just one of his posturing again?
Well, I don't want to comment on his motives. I just think it's not new news, and we're in a review process. And I would point out that even the Biden administration signaled that it intended not to simply renew, but actually to try to improve the agreement. So that's been going on with more formalized talks with Mexico, and also talks ongoing with Canada over the past many months.
I mean, essentially, that's healthy, isn't it? I mean, everybody needs to, no matter what the agreement is, you have to. Even I think if you have a wedding agreement, you should probably take time to look at it every once in a while and make sure everything is working for everybody involved.
That's right. And, I think when you look at what happened last year, there were those big 25% tariffs announced at the end of January. There was a 30-day pause. And the U.S. actually put tariffs on Canada and Mexico of 25% for exactly 72 hours. And then they came forward with the CUSMA exemption. And what happened there was the supply chains in North America are so integrated across the three countries that what the U.S. imports from Canada and Mexico, aside from energy and agriculture products, is actually inputs to U.S. manufacturing. And literally, American manufacturers were telling the White House, if you continue with these tariffs, we'll be sending workers home because we can't build products with parts that cost 25% more.
Now, could those be disentangled fairly easily, though, if this pressure from the president continues, or are they literally too intertwined?
I mean, at this point, major capital has been deployed over 30 years, first under the original NAFTA agreement, then later under CUSMA. And in a lot of these industries, these CapEx decisions are very long term. They can be certainly years and in several cases, decades. And so to unwind that is very difficult. Also, I think what businesses are looking for is stability in the tariff regime. So if you're let's say you wanted to try to do a new CapEx project in the US, the first thing the board of directors is going to ask management is, what's your assumption on tariffs for the inputs for this factory? And management will say, well, at this point, it's all coming in under zero-rated duties from Canada and Mexico under the CUSMA exemption, but there's a review process, and maybe there'll be a forced labor tariff, maybe there'll be a Section 301 tariff, and so there's no certainty on the tariff environment, so it's hard to make those CapEx decisions.
But the companies have been doing things, haven't they? They haven't just been sitting there waiting, going, oh, what's next? Are we going to have a deal or are we not going to have a deal? They have been doing things, haven't they?
Well, what we've seen is companies that have similar facilities across the three markets in North America, the three economies. If you have idle capacity in the U.S. and you're making something in Canada that you could make there, you might try to move that production to avoid a tariff on steel, aluminum, automotive, some of the tariffs that are still in place. and that don't qualify for CUSMA exemption. But in terms of new CapEx, actually building a brand new factory in the United States to build something there, we've not seen that. In fact, foreign investment is way up in the U.S., but it's driven by data centers. If you extract the data centers, other sectors are actually quite far down. So we're not seeing brand new CapEx happening in the U.S. at this point.
For Canadian business and companies, to a degree, is this a good thing, this pressure from President Trump? Is it getting them to take a look at their companies and see how they run they're run?
I think anything that forces you to look at where your markets are, where your sourcing is, I think is really important. If you think about a very basic value chain, in manufacturing, I source from somewhere, I transform or add value, and I sell somewhere. We've had it really easy selling into the U.S. market with no impediments to that over decades. Now, if you're in the steel sector, aluminum, and automotive, you've got a complex web of tariffs to manage. Other sectors, you're under the CUSMA exemption, as I mentioned. But this will force Canadian companies to look at their efficiency, to look at alternative markets. Canada's got a fabulous network of free trade agreements, but we've not been as good as we should have been about operationalizing that from a sales and distribution perspective and a sourcing perspective. So there's a lot that Canadian companies can do in this environment.
And are we taking advantage of that? That's been the big push. It got the Prime Minister elected, essentially, that we're going to find alternative markets. And it's been more than a year. Are we starting to see movement in that direction? It doesn't happen overnight, obviously.
That's right. I think if you look at the types of trade missions that have been run, I was part of the Canadian trade mission to Mexico, the largest in history. There were literally hundreds of companies and thousands of meetings. And so those relationships are building. Mexico is an obvious place for Canada to grow its trade. That side of the North American triangle has been a bit underperforming versus the bilateral sides with the U.S. and those two countries. And so that's an obvious one. We've also seen a lot happening with India in terms of getting back to a more normal trading relationship with the largest population country in the world with a great growth trajectory. So those are ones I'd look at. And of course, Europe is always there. Canada and Europe very close culturally. There's a free trade agreement. There's common languages with several European countries. So I think those are the bigger markets that Canadian companies should be looking at.
And are they moving to it? Do we have that drive in Canadian companies to go beyond the U.S.?
I think it depends on the company. I think for certain types of products, there's big opportunities in those markets. For others, just due to distance or compatibility, the U.S. will still be an important market. And let's be clear, I don't think we'll ever be able to get away from the U.S. We're just too close economically, culturally, linguistically, and so on. And so no one's talking about, necessarily aiming to reduce the U.S. It's about growing those other markets. And so I think we need to learn to do both of those things.
All right, and one of the other things that's been talked about for a while now, it's kind of been quiet for the last little while, interprovincial trade barriers. They were going to be torn down, and we're going to move between provinces. That seems like that has stalled, or is it happening behind the scenes?
I think the federal government is doing almost everything that it can, and I think some of the provinces are showing a lot of leadership in that area. I would point to Ontario as one that's been quite open about this. I think over time people realize that that's a big opportunity as well. I think there's some good studies from the University of Calgary about how much that will actually increase Canadian GDP, and that can offset a little bit some market access that we might lose to the U.S. over time as this administration continues.
That was Michael McAdoo, partner and director at Global Trade and Investment at Boston Consulting Group. Well, still to come, our conversation with the CEO of MDA Space. Stay tuned for that just ahead. Shares of MDA Space up more than 100% over the past 6 months as the company's earnings growth continues to gain traction among traders and investors. Now, at the same time, Friday's highly anticipated SpaceX IPO is also fueling renewed excitement across the space sector. For more, we were joined earlier by Mike Greenlee, CEO of MDA Space, live from the U.S.-Canada Summit.
Yeah, I think we have cross-border opportunities in all the areas that we work in. We deliver Earth observation data and information, which is important to customers in the United States, including defense. Space communications, though, is a big boom in business these days, with space-based data networks around the world and space-based direct-to-cell networks. The SpaceX of the world get a lot of publicity in terms of what they do with Starlink and the like, but there's a lot of other constellations around the world. They're developing space networks and capability, and our MDA Aurora product, a digital satellites that we build in Montreal here in Canada have a strong export opportunity around the world. In the area of defense, as defense expands, we have a global defense growing opportunity, but with the United States, there's a strong opportunity to continue our historical collaboration in space, both for civil space and the return to the moon, and in defense, especially as we expand into continental defense and worry about things like Golden Dome and SHIELD and missile detection and prevention here in North America.
Now, you started the year with a $4 billion backlog. Any updates or new wins, that could keep pushing that number higher?
There's been small stuff that's happened along the way, but I think that we'll get into a bit of an order season now as we go through the next couple of quarters. Folks, pursuits and that we've been working on throughout the years so far should mature to the state where we can start to see some orders flowing in that will further expand backlog as we go through the next few quarters.
You touched on it, I think, there too, but give us an update in a little more detail too on the Course Earth observation constellation ahead of the planned launch for it later this year.
Yeah, Course is in a great spot. This is us developing our next generation synthetic aperture radar satellites, two satellites, a C-band satellite, which is a broad area surveillance satellite, and an X-band satellite, which is a narrow zoomed in view. They're going to follow each other in orbit when we launch them at the end of the year, with our ability to be able to do large scans of the surface of the Earth and then detect things that we want to zoom in on with the following or trailing satellite. This is an exciting evolution in our fourth generation of radar satellites that we've developed over the last several decades, and will tremendously expand our capabilities. We have over 41 customers around the world that have signed letters of intent. I think 9 or 10 of those have already signed their contractual agreements to be able to provide this expanded service from our current RadarSat-2 capability as we move forward into the future.
And what what feedback are you getting any yet too? I know it's early days, at least for now, but are you getting any feedback from the customers that have signed those agreements so far?
They're just excited and waiting for the capability. A number of people are just getting data and services from us on our RadarSat-2 satellite in anticipation of the Chorus launch at the end of the year.
And when are you expecting, that demand and those agreements, to start flowing, to start turning into some revenue and some earnings?
Yeah, as we go through 2027, we're expecting that to occur. There will be a period of putting commissioning the new satellite capability that we launched in the end of 26. We'll commission that as we start 2027. Take a few months to get that into service, and then it'll start adding revenues to the geointelligence revenue stream.
So you touched on too, the return to the moon. You have noted that robotics work, tied to the Artemis program, continues despite NASA pausing Gateway-related work, with the potential shift toward the lunar surface missions. How does that affect, timelines for you and opportunities for, you mentioned Canadarm3 and MDA Space?
Yeah, we keep pace with those programs, the Canadarm3 program, which is with the Canadian Space Agency. This is one of Canada's contributions to the Artemis program, and that continues at pace to make sure that as the world works with the United States to live and work on the moon, as we go through the rest of the 2020s, so that we're on the moon before 2030, that Canada can be potentially in a position to help out with all of that program. You mentioned the pause in Gateway. That is true, but the program continues at pace while we look to reconfigure that. In addition, you would have seen announcements recently about what's called commercial LEO destinations or commercial space stations. NASA continues its competitive process for various companies to be able to put up and deliver and operate commercial space stations. We have an equity stake in one of those space stations, but we also have a robotics opportunity in all of those space stations to be able to provide our decades-proven robotics and our new MDA Skymaker product, which is a commercial derivative of Canadarm3, into the low Earth orbit commercial space stations that are going to be developed, again, over the next few years, again, before 2030. So a very busy time here as we go through the next 4 or 5 years.
Yeah, I can imagine, and a lot of opportunity, clearly. MDA Space also recently awarded that contract with the Department of National Defense, right, for ground-based optical space surveillance. How significant is defense? I know you touched on it in your first answer, but give us a sense for the overall growth strategy and where it lands.
Yeah, defense is really important. Like we see definitely geopolitical shifts in the world. One of the things we talk a lot here today at the Canada-U.S. summit, as countries stand up a little bit taller and worry about themselves just a little bit more. And so, the U.S. is taking care of itself. Other countries are taking care of itself even more. People are standing up a little bit taller, working on defense, security, economic prosperity, for their nations. As a result of that, the opportunities for sovereignty is the big conversation around the world. And from a space perspective, sovereignty means space-based Earth observation, to be able to observe your territory, space-based communication, to bring communications to all your citizens. We have a new product called MDA Midnight, which is a space control product that is a spacecraft to protect other satellites. So these things are all driving demand in defense departments globally. Canada is increasing its defense spend. We're a prime contractor for Canadian Department of National Defense. So we have a lot of opportunities at home and a lot of opportunities to export those capabilities to nations around the world that want to increase their defense and sovereignty.
That was Mike Greenlee, CEO of MDA Space, who joined us from the U.S.-Canada Summit earlier today. Let's have another look at how the markets are faring on Bay and Wall Street today so far. The TSX up today, a little bit of a rebound, too, after hitting a 3-week low yesterday, as we're seeing some strength in the energy, base metal sectors. Again, a little bit of a rebound, up almost a percent, up over 272 points. South of the border, more of the same. We're watching the roller coaster of the AI stocks. Well, we're back on the climb today, at least for right now. Dollarama also doing well today, posting a significant first quarter profit. Too, sales up over 20% for the first quarter too as well, driven in large part, it sounds like, from the company by total number of stores in Canada, some higher comparable store sales, also its Australian stores acquisition too. So watching for that, but Dollarama up right now, up over 9% right now, to trading close to that $200 mark right now. And south of the border, again, overall, things are in good shape too. As you have a look, the S&P up just a little bit too. Dow Jones up 0.5% today. Again, we talked about that roller coaster with the AI, trending down for the last several days. Some rebounds today. Certainly look like some investors are buying a little bit lower than normal. Oracle is having the tough day today, though. They beat revenue and profit estimates, but investors are concerned about Oracle's plans to raise more money to finance its build-out of data centers for AI. Certainly one of the day's losers so far. Market Call is coming up next. Today on the show, we have Stan Wong. He is portfolio manager at Scotia Wealth Management, taking your questions, North American large caps and ETFs. Thanks for watching. We'll see you tomorrow.